Hey guys, what's up? My name is Zach and you're watching Zach Talks. And in today's video, we're going to be talking about how to be a millionaire and moreover, how to make money in the long run and have millions of dollars at retirement age. Now, I know there's a lot of videos online talking about how to get rich quick, all these kind of schemes. This is not that. This is going to be a clear-cut video on exactly why it's so important to invest in the stock market and why it's so important to start young. And then also why it's pretty much one of the only ways to really get rich fairly easily without having to make millions of dollars starting your own company or being a high-paid executive or athlete for that reason. With that being said, let's get into it. So the real reason to start investing while young is because of compounding earnings. What this means is that the money you put in builds on itself and doesn't just sit in a bank account. The reason this is so big is because it allows you to make $40,000 or $50,000 for the rest of your life, for that matter. And then by the time you're 40 or 50 years old, be making $50,000, $60,000, $70,000, $100,000, $200,000 a year strictly in the stock market. This is because it works like a snowball effect. You can think of it as being a big mountain. The earlier you start, the bigger that mountain is. When you push the snowball down the mountain, it keeps rolling on itself, and getting bigger and bigger and bigger. As you get older, towards the bottom of the mountain, the snowball is really large. And you can think of the snowball as basically being a giant ball of money. And at the end of your life, when you're towards retirement age, you'll have a couple $1 million in that snowball, which is massive. Let's take an example of the S&P 500. The S&P 500 is a collection of the 500 largest companies in America at any given time, and it's considered the de facto standard for measuring the U.S. stock market. As you can see here, it goes up fairly consistently. There are some big dips, but it tends to go up over time. This is because it is heavily diversified and changes every single year. So if a company does well, it moves up, becomes a larger portion of the S&P 500, and if it does poorly, it'll even fall out of it. If we look here, you can see, let's say we invested in 1987 when it was $288. Now it's worth over $3,700, which is, again, a massive gain. If you were to put money in this every single year, you would basically consistently make money even through the crashes. So as you see here, there's been a couple major crashes. One right here in 2001. One right here in 2008, and then there was another recent one with the coronavirus, which recovered fairly quickly. When looking at all of these, they're all caused by different reasons, but recover fairly quickly. This was caused by 9/11, as well as a couple of accounting scandals, and the dot-com era bust. It took around a few years to recover, but then came back just to where it was before crashing again because of the housing market bubble. Then recovers again, goes up higher than it ever was before, and then crashes again for a few months because of coronavirus before recovering and reaching an all-time high where we are now. The reason this is because the stock market goes down fairly drastically when people get scared and pull their money out, but virtually always comes back stronger than it was before, which is why it's a fairly safe investment. Now, don't take my word for it. Let's hear it from a guy who knows a little bit more about the stock market than I do.
The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amount to, and it would come to $51 million now.
Now, $51 million is a massive amount of money, but 80 years is also a really long time to wait. So let's take a closer look at a little bit of a more narrow time frame. This is a website that allows us to calculate our future investments. We can see here that we can put in a starting amount, how long we're leaving that amount in, our return rate, and then how much we want to put in each month or year. If we were to start off with $10,000 at a return rate of 8%, which is roughly the same rate that S&P 500 returns at, which is the same graph that was shown earlier, and then put in an extra $500 each month, after 40 years, we'll have an ending balance of over $1.8 million. This is plenty for almost any person to retire with and to give your kids a good life. We can also notice that if we were to have not put any of this money in the stock market and put it directly all in our savings account, we'd only have $240,000, which is a massive difference. Let's take a look at something else. Let's say we just start with $100 and we put in no money each month. After 40 years, we now have $2,000. The point to notice about this is that simply by just saving $100, you're basically giving your future self a trip to Hawaii when your retirement's age. So next time you go and spend a little bit extra at the bar or have that splurge purchase, just thinking about what you're giving up later in life. Now, while investing is not completely risk-free, I hope you can see that the long-term benefits of investing significantly outweigh any form of risk that comes with them. And that over time, you're almost guaranteed to make money. In fact, in history, you will have never lost money if you would have kept your money in the stock market. So it's significantly more detrimental to yourself and your future self to not put most of your money in the stock market as soon as possible. So if that sounds interesting to you and you want to do this, please check out my future videos about exactly how to invest, what stocks to buy, and just how to make a simple brokerage account. I'll make sure to toss them in the description below once I create them. I really hope you learned something, and thanks for watching.